In this video, we're talking about HSBC's 0.99% mortgage. You heard correctly, 0.99%. We're going to go through the pros and cons, and more importantly, if it's right for you. That's coming up right now. Thanks for joining us. With us today, we have Samantha Clark, who's a mortgage agent with EMI Mortgage Services, and is also part of my Top Producer Mentorship Program. I'm excited to have you here. Welcome, Samantha.
Hi, Victor. I'm excited to be here.
Samantha, before we get into reviewing the HSBC 0.99% mortgage, tell our viewers a little bit about yourself and what gets you excited about the real estate business.
Ooh, thanks for asking. Well, for one, of course, I love to help my clients save money. But what gets me really excited, really excited, is helping my clients find opportunities to grow their generational wealth through real estate. And when my clients get those light bulb moments, when they realize how my strategies can actually help them reach their goals, that's what I absolutely love, and it's so satisfying. It's exactly as you've taught me. Stop selling, start helping.
Thank you, Samantha. And I really appreciate that comment. And by the way, your passion is so contagious. I'm sure your clients appreciate that too.
Oh, thank you.
So, okay, let's talk about the HSBC 0.99% mortgage. The reason we decided to make this video is because currently there's a lot of misinformation or just old information on social media. In contrast, we have the latest product details. That's because we have been selected to be part of the HSBC pilot program to roll out their products to the Canadian brokerage channel. Now, this is a tremendous opportunity, and we're grateful to have been chosen. So we're excited to share this info with you today. Now, we normally don't get too excited about super low rates, mainly because those products tend to be no frills or bare bone mortgages, and they're rarely a good thing for homeowners. Samantha, why don't you explain to our viewers why?
Absolutely. A no-frills mortgage is what we call a mortgage that has been stripped down of most or all features in order to achieve those rock bottom rates. Most borrowers who only care about the rates aren't even aware of how important these features are until it's too late.
So it's kind of like buying a base model car without a rear view camera or remote starter.
Right, because once you have them, you can't live without them. But yeah, that's a great analogy.
Okay, so what kind of can't live without features are stripped away from these bare bone mortgages?
Well, mortgages typically have features that can be really beneficial to homeowners, such as prepayment privileges, portability options, and options to refinance. These are important features to have because life can be very unpredictable.
That's so true. Can you give us examples?
Well, let's say your goal is to pay off your mortgage faster. If your mortgage has prepayment privileges, you can make annual lump sum payments. This alone can save a homeowner thousands of dollars in interest. Or what if you get a new job or for health reasons you have to move? Without a portability option, you're dinged with hefty penalties for breaking the mortgage before the end of the term.
And I've even seen contracts where they have what's called a BONAFIDE sale clause, which means you're not even allowed to leave your lender unless you sell. So if you want to refinance to consolidate debt or take advantage of a better rate elsewhere, you just can't. Talk about being shackled to your lender.
Exactly. So these are just a few reasons why we find these no frills or bare bones mortgages unsuitable for the majority of our clients. And it's definitely not worth sacrificing these features for a slightly better rate. Now, surprisingly, the 0.99% HSBC mortgage is not a no-frills mortgage. You get to keep these standard mortgage features. You keep the 20% lump sum prepayment privilege, 20% increase in monthly payments, and double up payments.
Yes, that's amazing. And something that really stood out for me is that even though this is a 5-year term, it becomes fully open after 3 years. That's unheard of. So technically, you can leave, refinance at a different bank, etc., without any penalties whatsoever. So, Samantha, who is this mortgage for?
Well, this is only for a high ratio mortgage, meaning you have less than 20% for a down payment.
So, what if somebody has 10% down for a purchase? Is this for them?
Absolutely, it's an option we should definitely consider.
And what if someone already has a mortgage and it's at another bank, say RBC, and their renewal is coming up soon? Can they switch to take advantage of this rate?
Yes, they can, as long as they are insured with CMHC, and that's super easy for us to check.
All right, so let's give our viewers an example of what a switch could look like. Let's say you bought a home 5 years ago and only put 10% down.
So that would have been a high ratio mortgage.
Right. Now, let's say the mortgage was $500,000. The rate was 2%, which means the current monthly payment is $2,117. So what happens to the payment if you switch? Your new payment becomes $1,924, giving you a savings of $193 per month. And the great thing about this is that with an extra $200 per month, you can focus on paying other debt, like credit cards, or use it to pay your mortgage down faster.
Right, using the prepayment or double up features that we talked about earlier.
So, Samantha, if our viewers want this mortgage, why not just go to the bank? Can't you just walk into an HSBC branch and get it?
Great question. You can do that, but working with a broker gives you a big advantage, and that is speed. First, you don't have to call and wait on hold for an hour for a rep. Instead, you have immediate access to one of us through phone, email, or text. Secondly, we can have an approval for you in as little as 2 business days. This significantly shortens the turnaround time to fund your purchase or switch your existing mortgage. And with new COVID protocols, borrowers can sign most documents remotely. They will only have to sign in person at the lawyer's office. So clients don't have to take time off work to visit a branch or meet with HSBC.
But best of all, Samantha, and maybe our viewers don't know this, there is absolutely no cost to use our bank services. So why not take advantage? So this begs the question, how long will this last? Since there's been talks about the Bank of Canada raising rates as early as March 2022, and we've already seen fixed-term rates starting to climb.
The 0.99% is ongoing as of this date, but if it changes, please feel free to reach out to one of us to get the current rate.
Great, and we'll talk about how to reach us in just a moment. But I also have to ask, and I'm sure our viewers are asking the same thing, what's the catch? What should we watch out for?
Well, it's a variable rate, which means that if rates start climbing, so will this rate. And it's very possible that rates will start to increase later this year. So if you're worried about rates going up and your mortgage payments increasing, then this might not be a good fit for you. If you value stability, then this is not for you.
And the rate is based on prime, which as of today is 2.45%. More specifically, it's prime minus 1.46%, which as of today equals 0.99%. So if prime goes up, so does the mortgage rate. So that being said, who should consider this product? Or as we say in our industry, who is this suitable for?
Well, if you can afford potentially higher payments later, then this might be for you. In the meantime, you can take advantage and use the savings to pay down the mortgage earlier on in the term.
And again, this illustrates how important it is to have the prepayment feature.
Exactly. And it's a great way to pay your mortgage off faster and potentially save tens of thousands of dollars in interest. And remember too, it can be converted to a fixed rate later on.
Plus, on another note, I want to point out that the penalties are easy to calculate should you have a need to break the mortgage for whatever reason.
Oh, right. For many homeowners, they feel that it's a complete mystery on how penalties are calculated. And here, it's a very straightforward calculation. 90 days interest, or 3 months. That's it. It's very simple, and it becomes completely open after 3 years.
So, just to be clear, no penalty whatsoever after 3 years.
Yes, exactly.
You know, Samantha, it sounds great, but clearly it's not for everyone. And if it's not, what else can you do for our viewers?
Well, we start by asking the right questions. From that information, we find a mortgage and a bank that meets your criteria. You see, as we said earlier, it's all about suitability. Is the mortgage right for your specific needs, both in the short and long term? So if this mortgage fits, then great, we can go ahead with it. Otherwise, we have so many other options we can explore.
That's great. Samantha, thank you for being here today. It's always a pleasure discussing real estate ideas with you.
Thanks for having me.
Don't forget to check out Samantha's Instagram and Facebook page. Again, the links are in the description below. And if you want to learn more about the HSBC 0.99% mortgage, or to see if it's right for you, feel free to contact us and we'll be happy to help. Contact details are in the description below. Keep in mind, this information is current as of the recording of this video. Always check your contract for terms and conditions. Thank you, viewers, for watching. If you haven't done so already, don't forget to subscribe. Have a great day, and I'll see you next time.